All right. Thank you so much for joining us. I am going to go ahead and get this started. So, I am looking to give you some information on how to buy and sell a home simultaneously. Say that word 3 times fast. But yeah, I think that, sometimes people feel like it's very complicated to try to move from one house to another house. And how do you coordinate all of that? What if you're currently in a home that has a 2.5% interest rate, 3% interest rate? We all refinanced if we were so fortunate to do so in the last couple of years when the interest rates were down. But now maybe you're feeling trapped there. Yes, you have a 2.5% or 3% interest rate, and it's very low. But if it's not working for you, if it's not working for your lifestyle, then is it really the best home for you? Even though you're paying a cheaper amount of money for it, but it's not working out for your life. Is it really the best? I don't know. That's a question that you can answer for yourselves. But ultimately, I just wanted to give you the information on how to consider buying and selling if you want to do it at the same time. If you already currently own a property and you want to think about selling it, and you want to think about moving on to another place, how can we do it? So, intro to the process. I think that we're going to go through and just look at different ways of getting money out, different ways of sourcing them. Things to consider would be timing of it. So are you going to sell first? Are you going to buy first? Can you do that? What's the best time to do it? When should you be thinking about it? Also cash flow. Maybe all of your equity is in your current place. And so now you're trying to move on to your next place. How do you pull that money out of it? Where can you get money from? As well as the move itself. So how can you physically time the move? How can you make that go smoothly? So timing. Do you need to sell first? Do you need to buy first, or neither? Selling first, that's if you need to pull money out of it. If you have your equity sitting in your home and you need to pull it out in order to buy your next place, you would consider selling it first in order to get it the money to then go and purchase your next place. Perhaps you can buy first. So some people, they want to be able to move first and then not hassle with having to sell it while they're currently still living in the property. Then you can move. So go buy first and then move out and then turn back around and then sell your current place, or neither. Maybe you want to rent out your place that you're living in currently and then go buy another house. So how can we get all these timing? How can we coordinate it all together in order to help you move smoothly and time it all? That's where one of the options would be to currently rent out your current home. So let's say you have a 2.5%, 3% interest rate. Your mortgage is lower. It's actually a great time to consider renting out your current place because the rental market's really strong. There's not a lot of inventory out there. It's very expensive to buy a home, so a lot of people have to turn towards rental. We also live in a very transient area, so the rental market here is a good, strong rental market. So what are the things you want to look at if you want to consider renting out your current home? What's the mortgage that you're currently paying? Landlords typically will pay for HOA and condo fees as well as the mortgage. So think about your all-in cost per month of what that is, as well as what's your yearly maintenance costs of upkeeping the home. You also want to look at what your rental rate in the area can be. I can pull those up for you so you can compare them and see whether or not it makes sense financially in order to rent your current place. And lastly, do you want to be a landlord? That's a question I think you have to think about personally. Can be somewhat of a headache because you do have to continuously look for tenants. I can help you look for tenants. I can also put you in touch with a property management company. Property managers will take a certain percentage of the rent per month to handle the management of the property, let's say. the services I provide to rent out your home, I can help you find the tenant. So I can help you vet the tenants as well as handle the showings, et cetera, and market the rental for you, get your lease signed. Once the lease is signed, then I turn it over to you as the landlord, and then you go from there. So things to consider, just to wrap it up, for rentals is, how much is a rental rate? Because we were in a time where the interest rates were lower, there is opportunity for people now to break even or to possibly cash flow positive on their current home. It's difficult to do that if you have an investment property, because it can be difficult to do that, to break even, because typically the rental rates may not cover your mortgage. But with interest rates being lower, a lot of people are finding that they can actually rent out their current home for a break even or even cash flow positive. So things that I can help you with would be to look at what the current rental rates for your market is. And that way you can consider whether or not it makes sense to do that. Now, if you were to rent out your home, then something to consider would be you can't then take the cash easily out of your home because you're not selling it. So what are cash flow ideas that you can do to source the funding in order to purchase your next place? Home equity line of credit. So you can consider your home as, let's say, a credit card. The bank will allow you to pull out equity up to, depending on your credit, up to 80-90% of your value of the house. And so we've seen great appreciation over the last couple of years of home values. So you can probably pull a good amount of money out of your home in the form of the home equity line of credit. There are 2 credit unions that I currently work with to provide HELOCs, as they call it, for clients. I can connect you with them. But very important is that you can only pull the HELOC from your primary residence. So if you are considering bringing the cash out in order to purchase their next home, you need to do it well in advance, because usually if the bank knows that you're trying to pull out the money in order to purchase your next home, then they may not approve your HELOC. So you want to just open your HELOC. You can do it anytime. It's not going to cost you anything if you don't use it, because think of it like a credit card. Your credit's sitting there, but it's only going to charge you once you swipe your card and start using it. Same thing with the HELOC. The HELOC's only going to start charging you if you pull the money out. So you can actually open the HELOC, have it open for years and not touch it, and then use it when you need to. So highly suggest that anybody who is considering doing this to just go ahead, get your HELOC put on, so that way you will have it. The HELOC interest rates do tend to be higher because it's prime plus a certain percentage. So something to consider is if you were to use it, it's not going to be the interest rate of a mortgage. It's just going to be slightly higher than that. So happy to connect you with credit unions that can do that. Another way to draw out money for sourcing for funding to purchase a home would be a 401k loan. I know, scary, you're not supposed to touch your 401k, but it can be a good way to source money for you because it's really a loan against yourself. You're borrowing money from yourself. You can typically borrow up to 50% of your vested balance and have a repayment of or a maximum of $50,000, whichever is less, and have a repayment term of typically 5 years. So you are taking money out from your 401k, so it's your money, then you can pay yourself back. So it's a certain type of way to loan yourself money without necessarily paying interest back towards the bank. Obviously, with any of these cash flow ideas, you just want to make sure that you're talking to a financial advisor or your CPA, tax accountant, because there may be tax ramifications for all of these things. I'm not a financial planner or a tax accountant, but these are just ideas that can help you cash flow so that you can purchase your next place. I don't want you trapped in your current place if you want to move out. So 401k loans can be a great way to get money out when you are borrowing from yourself. The third way that you could is a bridge loan. So banks some banks will allow you to what's called bridge the gap, and they'll let you purchase your next home and then give you a bridge loan to allow you to then sell your home. So it's a way to move first and then sell your home after. It's a short-term gap in between, and typically it's going to be at a higher interest rate and can cost you more money, but it is a good way if you need to move out first and then try to sell your house. It's a good way to bridge the gap, hence bridge loans. Fourth way could be a second mortgage. You can place another mortgage on your home. This would then allow you to draw money out, but it is going to be a second mortgage. So you would have a second mortgage payment, 2 loans on your home. Lastly, you can consider family loans or gifts if you have fortunate enough to have family members that can do that for you. Caveat to that would be that if your family is going to give you money for a loan, they do typically have to sign something saying that it's a gift and that there's no expectation of repayment. Of course, whatever you want to do with your family after the purchase, it's up to you. But just another way to source money, if you need it, would be to see if your family's willing to give you a gift. So these are a couple of different ideas to cash flow. The HELOC one is pretty popular because you're able to draw the money out and then rent your house out, but you cannot rent your house out and then draw the money out on a HELOC. So really, really important if you are going to do a HELOC is to go ahead and just get that done already. So that way your HELOC is set on your primary home. You can then use it to purchase your next place. So very popular. But if you have questions about any of these, need more information, of course, I'm here. I can help you and help you get moving. Lastly, let's talk about the move. Physically, how can we move out? So advantages of selling first and then moving. Advantages of buying first and then moving is that you can get settled in your next place. Then your current home is vacant. You can stage it, and typically you'll get more money out of it if you do stage it. So you can move and then sell. Ways to do that: the HELOC, the bridge loan, ways to draw money out in order to get your purchase. The other way to do it is if you want to sell first and then move, you can use what's called a rent back period. So what you can do is have the buyers come, they'll close on your home, and then allow you to stay in the property for up to 59 days. If they're using a loan, you can stay in it for up to 59 days after as the seller. So it will give you time to then go find your next house. You've already closed, so you have the money from it, but then you have 59 days to find your next place. It's a good way to do it if you don't want to incur the risk of potentially not selling your home. However, inventory is very tight. It's a good time to be selling your home right now. So chances are that if you were to sell it, then you'll go and find your next place. It'll be easier to have the money in place already and then go off and find your next home. Things to consider would be timing of it, because you do have 59 days. You can prolong the close period. So you could do a 30-day close with a 59-day, which would give you about 90 days. The only caveat to that would be that your 30-day period, and then you close your loan, will prolong how long it's going to take for you to get your money. So typically we'll do like a 21-day close on this end, and then we'll do a 59-day rent back to allow you time to go find your next place, close on it, and then move in. Of course, it does require some flexibility on this side when you're moving, because if this seller needs a rent back, then it can be tricky to time things out. But it is possible to be able to sell your home and then move. So there's always possibilities to help you achieve your goals. But in conclusion, I hope that this was at least enlightening in some ways, helpful to kind of get you thinking about how you can manage selling your current place or renting out your current place in order to then move. I don't want people to feel like they're trapped. I keep hearing that people feel like, hey, I have this like super low payment. It doesn't make sense for me to move. But if you're not enjoying your place or it's not working for you anymore, there are options in order to get you out and also help you build a real estate portfolio. I mean, right now with people sitting on these homes that have these really low interest rates, you are able to rent them out and be able to do it in a cash flow positive way. So hopefully you found this helpful. If this is the Buying and Selling Simultaneously Masterclass. If you have any questions at all, I am always here to help you. And I look forward to talking to you soon.